We are highly cognizant of the investor distress caused by this most recent asset price drawdown. Whether the market goes up or down, there are many variables we survey to determine whether we believe the market is materially overbought or oversold. In this latest edition of LPL Street View, we'll take a look at one of those variables as we attempt to assess whether this latest drawdown is in the early, mid, or late innings. This market sell-off has perhaps been made more uncomfortable than some others, given that it is in sharp contrast from the relatively smooth ride we've witnessed since late March of 2020. Much of the downturn, we believe, has been induced by concern over inflation and the ability of the Federal Reserve to offset inflation without pushing the economy into recession. Our view is that inflation may have already begun to subside. The April headline CPI number was indeed slightly below March's 8.5% reading, which we think is good news. We believe a downtrend in inflation readings could in fact continue. Should this trend develop, we believe that it will alleviate some market distress. But what about today's distress levels? Where are we in the tactical fear and greed cycle? Again, there are several things we watch that may help identify extremes in the market. This chart is just one of those variables. It is the ratio of the S&P 500 index's one-year return relative to the CBOE volatility index. It produces a visual representation of potential extremes in market conditions. The latest chart points to current downside extremes that rival the beginning of the COVID era and Q4 of 2018 and Q1 of 2016, 3 periods of decided market volatility. Based on this chart and other technical and sentiment indicators we follow, we do believe that we may be nearing the late innings of this period of market distress. Our fundamental market and economic work shows that this current bout of market fear may be overdone. We are now waiting for more formidable technical and sentiment signals that would indicate a time to adjust our suggested asset exposures to position for an equity and bond market rebound. The time has not yet come, but we are anticipating its potential near-term arrival. Thanks for listening, and as we always say at LPL Research, allocate wisely.